Welcome to Citra21Channel, your gateway for exciting and engaging content. Today, we delve into the upcoming earnings announcement for stock PAYX. As we embark on this journey, let's first take a look back at the company's historical earnings performance. This will help set the stage for the conversation about what's to come. In the past few years, PAYX's earnings performance has been somewhat of a mixed bag. There have been quarters that showed declines, others that showed growth. It's been a bit of a roller coaster read, but that's not necessarily a bad thing. It's important to remember that in the world of stock trading, volatility can sometimes create opportunities for savvy investors. But let's focus on the positive. The most recent quarters have shown a positive trend, with significant growth in both earnings per share (EPS) and revenue. This is a promising sign for anyone keeping an eye on this stock. It suggests that the company is on an upward trajectory, and it's always exciting to see a company showing signs of growth. The key takeaway here is that PAYX has demonstrated its ability to bounce back and show growth, even after periods of decline. This resilience is a good sign for the future, and it's something that potential investors will likely find encouraging. Now, as we look to the future, it's important to keep this historical performance in mind. The company has shown that it can grow, and we've seen evidence of this in the recent positive trend. This sets the stage for what we can expect in the upcoming earnings announcement. Will PAYX continue this positive trend? Will the upcoming earnings announcement reflect the growth we've seen in recent quarters? These are the questions we'll be exploring as we delve deeper into the world of PAYX. For now, though, we can say this. The historical performance of PAYX, particularly its recent growth, gives us reason to watch this stock closely. This growth trend sets the stage for what's to come in the upcoming earnings announcement. Now we dive into the analyst sentiment and grades for PAYX. As we peer into the minds of the market's experts, we see caution etched across their analyses. The latest update reveals a notable skew towards underweight and underperform ratings. Out of the analysts tracking PAYX, 8 have marked it as underweight, while 2 have tagged it as underperform. This caution comes as a conundrum, a puzzle to solve. Why? Because the recent quarters have shown a positive trend with significant growth in both earnings per share and revenue. So, why the caution? It's a question worth pondering. Perhaps the analysts are playing safe, or perhaps they see something not evident to the untrained eye. Either way, this sentiment towards PAYX is not to be ignored. It paints a cautious and uncertain picture of the future, but remember, the upcoming earnings could surprise. This analyst sentiment paints a cautious picture, but the upcoming earnings could surprise. Next, we examine PAYX's valuation and stock performance metrics. It's essential to understand that valuation is a comprehensive measure of a stock's worth, as determined by its earnings, growth rate, dividends, and risk. In the case of PAYX, Investors Observer has given it a somewhat weak valuation ranking of 21. This might sound disheartening, especially given the positive earnings growth trend we discussed earlier. What's contributing to this low ranking? Well, it could be due to PAYX's recent rebound and its approach to all-time highs. In other words, the stock might be seen as expensive relative to its intrinsic value, which is a turnoff for value investors. However, remember that valuation is just one piece of the puzzle. Other factors like growth potential and market conditions also play a huge role. These metrics suggest that PAYX may not be seen as a good value at the moment. Moving on, we explore the earnings expectations and business factors impacting PAYX. The consensus among analysts paints a picture of moderate growth. They expect an earnings per share, or EPS, of $1.36, which would mark a 5.4% increase year over year. Revenue is also anticipated to rise, with projections coming in at $1.46 billion, up 5.7% from the previous year. These figures indicate that PAYX is expected to maintain its positive course. A key metric to watch, the earnings ESP, or expected surprise prediction, hints at a potential earnings beat. This tool can provide a handy indicator of whether PAYX could exceed expectations when the company releases its earnings report. Now, let's consider the business climate. Comments from the CEO have underscored the resilience of small businesses, suggesting a stable macro environment in which PAYX operates. This resilience, coupled with the anticipated positive impacts from service demand, bodes well for the company's performance. Higher revenues are expected for the quarter that ended in February 2024, indicating that PAYX is successfully capitalizing on market opportunities. In summary, the earnings expectations for PAYX are encouraging, and the business factors at play appear favorable. The company is poised for growth, with a potential earnings beat on the horizon. The resilience of small businesses, as highlighted by the CEO, and the anticipated uptick in service demand further enhance this positive outlook. These factors suggest that PAYX is expected to continue its positive trajectory and is operating in a favorable business climate. Finally, we consider the investment considerations for PAYX and provide some actionable takeaways. The current intrinsic value estimate of PAYX stands at $171.48, while the trading price lingers at $121. This disparity suggests that the stock is undervalued, potentially offering a buying opportunity, especially if the earnings report is positive. Moving on, the expected earnings increase of 25% in the coming years is a strong indicator of future growth potential. For existing shareholders, this positive growth outlook and potential undervaluation might justify holding onto your shares or even increasing your position, especially if the earnings report confirms the positive trajectory. As for potential investors, those considering initiating a position in PAYX may want to pay close attention to the upcoming earnings report. A positive surprise could lead to a favorable market reaction, and given the stock's undervaluation, there could be significant upside potential. Whether you're an existing shareholder or considering initiating a position in PAYX, the upcoming earnings report could provide significant insights and opportunities. Options, strategy consideration. Given your interest in options, strategies around earnings announcements, you might consider strategies that benefit from volatility, such as straddles or strangles, if you believe the earnings report will lead to a significant stock price movement. However, be mindful of the implied volatility premium that often inflates option prices before earnings announcements. Conclusion: PAYX's upcoming earnings report will be a critical event for the stock. The historical growth trend, positive news sentiment, and analyst expectations suggest that the company may continue its positive earnings trajectory. However, the cautious analyst grades and weak valuation ranking indicate that not everyone is convinced of the stock's potential. As always, it's essential to consider the broader market context and your investment strategy before making any decisions. Remember, earnings reports can be unpredictable, and even companies with positive indicators can surprise to the downside. Always be prepared for any outcome when trading around earnings. Disclaimer: the information provided in this video is for educational and informational purposes only. It should not be considered as financial, investment, or professional advice. Viewers are encouraged to conduct their own research or consult with a qualified financial advisor before making any investment decisions. Don't forget to subscribe and share with your friends, family, and groups. Thanks for watching Citra21 Channel.